Thank you, Sandhya, for arranging this. All my pleasure.
And before we jump into the conversation, let's take a quick minute to introduce Indian Power Bank.
Sure.
We have been building this platform for almost 3 years now, and it's been a very organic journey for us. Over time, ISC has grown into one of the trusted voice in India's startup ecosystem. It secures over 6 million impressions every month across our website and social channels, and a very engaged community, like about 30K plus founders, investors, and operators. Now, talking about our focus has always been quality, deep, insighted stories and thoughtful created conversations with founders, venture capitalists, and industry leaders rather than just a headline driven subject. Beyond content, we are now evolving into a more network driven platform like this one that helps connect startups with investors and enable meaningful conversations around capital, growth, and real world challenges. So, with that context, we are really glad to have you here today. Shreya.
Great,
Looking forward for
great to
this.
understand your startup story as well.
Sure. Yes, you think?
I'm saying it's great to understand your startup story as well. Yeah. Happy to
Okay.
understand what you'd
And
like to know from me.
sure, sure. So, Ms. Shreya, talking about your professional journey, like you have built a career across investment banking, investor relations, and venture capital, and now lead the capital formation at Aavishkaar Capital. So, could you walk us through your journey and what you do specifically to the capital formation side of venture investment?
Sure, sure. So, to be honest, I started out my career post graduation into financial media, something that you're doing, but more niche in terms of being an assistant editor in a magazine which was predominantly catering to CFOs and CIOs. So my journey in finance kind of started off from there to understanding financial products, how a leader in the financial world thinks, how they plan investments, how they do it for institutions, right? From there, I eventually planned that I would want to do something in this space. I ended up doing CFA and landed my first IB job. What I knew from day one as to who I am as a person, I am not the desk kind of a person. I need to meet people because I strongly believe from day one you learn more with the meeting, with networking, and from people's experiences because they are hard learnings that they have had over the years, right? So I wanted an end-to-end role. I didn't want a back office role or a mid office role. So I let some offers from big institutions go because they were either back office or mid office. And I ended up joining boutique investment banks where I could source. I was connected with startups. I could execute, so I could learn a hard skill of doing pitch books and models, which is a dire need if you ever want to be in this space. And obviously, then eventually pitching them, understanding their industry and going to investors. So my network started from there, and what I believe has brought me till here is my network that I built at every stage. So at in those IB jobs, which is around 8 years of IB career, what I predominantly built is relationship with those founders because founders grow and so does their wealth. Um, Obviously, VC funds, PE funds, need to know what they're thinking, how the capital is flowing for them, what their investment thesis could be going forward. So those kind of relationships. Cut to, I moved to more like a role in the CEO's office where I was actually building financial products. But what I figured and what even the CEO who was working with me figured, I was very good at fundraising because I banking gives you, a knack for building a story, for understanding the story and telling it in a certain way. So I also raised for that particular startup I was a part of. So that startup, however, was, working with lot of ultra HNIs, family offices, HNIs. So with that, I added a new section of network or a class of investors which had just come on to invest in the Indian market. So I broadened my investor base. And post that, when I came to Avishkar, I again got to know about another section of investors, which was much bigger, which was sovereign wealth, pension funds, DFIs, right? And so were their expectations, so were their requirements. So all in all, what I've built in all these years is a network of different type of investors, different type of communication. And eventually what kind of works is maintaining those relationships, how to handle different situations, different kind of people. It's more like a people skill job than anything else.
So that's a fascinating journey, especially the shift towards working very closely with LPs and fundraisers. So, to set the context, how do you define capital formation today? And like, how has its role evolved in the venture capital ecosystem for over the past?
Yeah, so how it is evolved is predominantly the type of investors which were previously investing in alternative assets. So venture capital funds and private equity funds predominantly come in the alternative asset class, which is absolutely high risk, right? They are at the highest end of risk. So initially, the domestic market or Indian investors were shy of investing in such asset classes because the risk appetite of Indians, or I would say the aversion is relatively high. However, with more wealth that has come to our founders, our families who've built businesses, entrepreneurs, that has expanded. So their need to diversify it and their ability and willingness also to take risk has increased, and that also happens as the country grows, evolves. They've also understood that there is a startup ecosystem which didn't kind of exist previously. More founders are coming, more people are ready to take the risk of being an entrepreneur, are ready to fail as well, right? So with the changing ecosystem, a lot of wealth which was mostly coming from outside India is equated now. So mostly you will see in funds, Indian funds also, a lot of domestic capital is going in indirectly into startups also. So that has evolved. Another way it has evolved is this asset class again used to be more for institutions because of the large corpus they used to have, because of proper investment policies that were drawn in their you know, offices. But now, bigger families, entrepreneurs, and people, the new affluent which is coming on, growing, which their whose wealth is compounding. They are understanding how to do portfolio allocation. They are okay to take certain amount of risk. So one is it's moving from from an international to domestic capital flow. Another is from an institution to a family office or a ultra HNI, more towards a retail segment. So that's how I have seen capital formation. So LP tables for funds have also moved in that way.
So, and that's a helpful way to frame it, especially given how dynamic the funding environment has been. So, you work closely with the diverse base of institutional investors. So, how do you approach building and sustaining long-term relationships with entities while balancing their expectations with the fund issue?
Correct. So see, one thing is very staple, or very it's common sense that they will be repeat LPs if you perform, right? So they will again come into your next fund and next fund if your performance is good. Second thing is, if you're high on ethics, compliance, governance, there is absolute transparency that you bring onto the table. So that is in terms of everything that is on an institutional level. Now, when it comes to a one-to-one relationship, I do not believe that fundraising is a sales job, right? It is, I segregate it. I am not going and selling something. I am telling a story. And I believe that if you put money into this, this could go somewhere and it could make money for you, versus offering you a plethora of things and saying, okay, you buy this and I'm sitting in a shop, you can buy this, that. It's not a sales job for me. So that's how you segregate, and that's how your relationship also has more transparency. The person is able to trust you. You have to be upfront in all your communications, that okay, listen, I have performed well on this, but there have been some failures. You can't shy away from your failures. You can't show misrepresentation of something. You have to be honest about your communication, and you have to respect somebody's choices. Other than that, it's also, how on personal level you kind of gel with somebody. You don't always need to go to an investor and only when you're fundraising, right? You need to maintain that relationship irrespective that you're raising or you're not raising. Because even if, they end up giving money, they don't end up investing, your relationship should go beyond the transfer of money, is what I believe. And that's how I've kept my relationships.
So that balance is an alignment and expectation. Setting is clearly critical.
Correct.
Talking about storytelling and differentiation in fundraising, like in a competitive fundraising land, what makes a fund stand out? And like, how important is storytelling when communicating with potential and
It's very important, but to be honest, if the story is real, you just have to tell it, right? And mostly in a fund, right, or in any organization, it's the story of the founder. We are just enabling and opening those doors that the founder can step into and tell his story. If it's his or her story is genuine, and if it has seen ups and downs, as I said, you have to be very transparent on all your flaws, any failures. You have to openly come out on the lessons that you've learned over the years. And then that story is real. Otherwise, if everything is in a linear form, it's too good to be true. Right? Neither is life linear, nor is any business. So I think the true story coming out with your exact true story is fundraising for me. Obviously, putting it on paper, building presentations is a skill that you acquire over the years. I strongly believe that when you're communicating, just give out 3, 4 key messages, because human brain can't remember more than that. So if you want to be in somebody's memory, don't cloud them or don't give them too much information. Just leave them with couple of thoughts and take it from there.
interesting, especially the emphasis on narrative alongside performance.
Correct.
So Aavishkaar Capital has a strong focus on impact investing. So how does capital formation differ when raising funds for impact strategies compared to traditional VC funds?
Correct. It differs a lot. To be honest, there are VC funds, there are PE funds, and impact investing is an absolute different asset class in my head. And so does the markets. Markets also see it like that. See, when you're going to do some good and when you're going to do it for people who are not coming from a relatively privileged section, it takes time. So it takes time for a farmer, to grow a tree and give out carbon credits out of that. It's a 15-20 year process, right? It takes time. So one thing is it takes a little more time than the traditional funds, right? Avishkar has gone from seed into, such companies. They've also, found entrepreneurs who could build businesses. So they've literally incubated and now they do it at a relatively, later stage because the ecosystem has evolved. So one is that you have to build the ecosystem for impact investing. You have to figure out strategic partners, investors who believe that while doing something good, money can be made. It's not philanthropy. You have to differentiate it from that. So another thing is VC funds will tell you that, we'll make binary returns for you. We can do 10x, but they can go zero as well, right? In impact investing, I cannot afford to go to zero because the kind of eventual, recipient of the business that I'm doing is somebody whose life depends on it. So for me, it's negative impact if my business fails. I cannot afford to do that. So I cannot promise you 10x returns because I can't go to zero as well. So my risk is also very calculated in those terms. That is another part of it. And so when you see the return metrics also, they differ. We somewhere in 3 to 4x. Yes, your private equity will give you similar or higher returns, but in a lesser period of time because they enter very late. They do more consulting, strategy, value creation. Impact investing again takes time. So it's differentiated in that way, and so is the investor class. Somebody who's looking to make, say, X, or who's looking for a unicorn to be created in 5 to 7 years, it's not an asset class for them.
That's a nuanced distinction, especially when balancing financial returns.
Yes,
So
yes.
now talking about the fintech sector, with the role in capital formation. Like fintech is reshaping financial ecosystems globally. How do you see fintech influencing capital formation, particularly in terms of access, efficiency, or investor participation?
See, it's a broad, fintech is a very broad phenomena, right? You have lots of subsectors into it. While financial services at macro level is a sector you see will give you the maximum returns because lending, savings, investments have been key. And that's how the country also, any country's financial services is the highest giving out sector, right? Because it's a necessity more than a luxury to have. You need to have banks, you need to have insurances, and so on and so forth. So anybody who is building, say an infra layer for financial institutions, in my opinion, will do good. But again, it takes time to build because these banks and PSU banks, private sector banks, insurances, everybody has been built, over the time. They are not those quick startups. So they to change things in those institutions, it takes time. So while you can invest in fintechs early, you need to give them again time to scale. Ones that can scale quickly and do very fast are the newer neo banking was one, but it didn't work. Everybody thought digital accounts would work very fast. Somehow it took time to operate. Crypto based platforms came and went off. So I think for me, capital formation for predominantly fintechs who are working in relation or in coordination with the financial sector biggies or are somewhere tied up with the banks, insurances, and others could be relatively easy. Having said that, they had a boom in 23, 24, and then right now nobody's very excited about fintechs. But it keeps on changing. So it can't be again linear.
That's a strong point, especially around how technology develops new channels. So, to close, for professionals looking to build career in venture capital or capital formation, what skills or experiences would you recommend they focus on?
I think it's a mix of hard skills and soft skills. But if you're more hell bent towards capital formation, fundraising, IR, and others, your soft skills need to be slightly higher because this is a business of relationships, as I started my conversation with. You need to be open to have a conversation. You need to be okay when people say no because you're asking for money, and most people will say, no, I'm not interested. That's okay. You need to still carry on that relationship, right? So, an internal instinct or say a persona for somebody, you need to be patient because fundraising takes time, capital formation takes time. That's where the IR part intersects. You have to keep on interacting, you have to be in touch. So very, very soft skills. For example, I generally make notes when I meet somebody and remember when their birthday is, where their daughter went to college. This personal touch, when you next time talk to that person, so they don't feel that you're just anybody and you're remembered by something. So that's the softer aspect. But that softer aspect can only come with knowledge and some insights, which are predominantly from your hard skills in terms of understanding of numbers, how balance sheets operate, how businesses work, how markets are going. Please read. I mean, I remember our parents telling and our teachers telling, read newspapers. I tell people right now, please read newspapers. Know what's happening. There's nothing better to know what's happening in the world, and understanding it on regular basis. Be very good with when it comes to understanding numbers, doing analysis of that, working on models, financial models, presentation skill is a very important skill when it comes to these kind of roles, because you're telling a story, so your story needs to come out in a certain way. So yeah, it's a mix of hard and soft. Soft skills are predominantly backed with a lot of analysis of things.
So, are there any underrated skills that you think people often overlook in this field?
I think patience. Patience is the key, and somebody who's patient enough doesn't get, or maybe you can say is balanced enough, doesn't get too excited when something happened, doesn't get too depressed. Because as I told you, there will be lot of no's. You will get, one yes after 10 no's. So you have to be very emotionally balance. It's also how, but that comes with experience, right? It doesn't come naturally to someone who's just joining it. You tend to get excited, you tend to get depressed. With time and with experience, you learn, okay, this is how things happen. Eventually everything has to reach to an outcome, that a fund needs to be closed, a transaction needs to be done. So eventually just focus on that outcome. Somebody who's focused is outcome driven. These are a couple of things which people don't see easily, but kind of are needed for a role like this.
That's a great note to conclude on, Ms. Shreya. And thank you for sharing such thoughtful and nuanced perspective on capital formation. Your approach to building and nurturing LP relationships and your insight into the evolving dynamics of fundraising. It was very insightful to hear that.
Thank you. My pleasure. My pleasure discussing all of this. It kind of felt a story for me as well.